Hello, this is Adrian Gollifer from FCA Regulatory Solutions with this week's Reg Watch. And this week the FCA has signalled a continued tightening of its supervisory approach alongside reforms that will directly impact insurance brokers, MGAs and claims management firms. First, in the mortgage broking space, enforcement activity targeting unauthorised mortgage broking highlights the ongoing concern around perimeter risk and distribution oversight. And for insurance intermediaries, this reinforces expectations around appointed representative governance, if you have ARs, introducer controls, if you have introducers, and oversight of any delegated activity, for example, outsourced operations. Second, car finance. Developments in the car finance reader scheme continue to build. With major lenders moving toward large-scale compensation, the FCA has been explicit that consumers don't need to use claims management companies to access redress. This has clear implications for claims management company business models, while also reinforcing the regulator's focus on fair value, commission transparency, and conduct risk across distribution chains. And third, the FCA is increasing its financial crime supervision with a number of firms under review following market disruption linked to alleged fraud. So the read across for insurance firms is quite clear. Anti-money laundering frameworks, governance and oversight of complex or delegated structures are under closer scrutiny. And alongside this, the FCA has confirmed reforms to its senior managers and certification regime, the SMCR. For anyone following this, these changes are designed to make the regime simpler and less burdensome, particularly for smaller firms. Good news. Criminal record checks will now last for 6 months instead of 3. Senior manager approval timelines are more flexible, and firms will have longer to update their responsibility documents. Certification processes can also be aligned more closely with annual reviews, and documentation requirements have been streamlined. For brokers, MGAs and claims firms, this should reduce operational time and friction, enabling faster hires and internal movement. However, the core principle remains unchanged. Accountability sits firmly with senior managers, and firms must continue to evidence robust governance and oversight across this piece. So overall, the direction is consistent, reduced admin burden, but increased regulatory expectation. So what should firms be doing now? Stress testing consumer duty outcomes, the third-party oversight and financial crime controls, while keeping an eye on those SMCR processes to reflect the new obligations in train now. So that's this week's Reg Watch. More next week, and for deeper insight, speak to us at FCA Regulatory Solutions on the usual contact channels. Thanks.